Okay, so top-down analysis on gold. On the weekly time frame, we could see the market trending up. Thus, we can agree that the higher time frame is bullish. So weekly is bullish. On the daily time frame, let's see. We had impulse, pullback, impulse. So the daily time frame is bullish. So this would be the daily range on gold. This is the last low and this is the last high. So for all we know, gold could pull back anywhere inside here and to make its lower high to go ahead and make its higher high. For gold to be considered, for the daily trend to be considered broken, we would have to break this low. So the daily is bullish, the weekly is bullish. Right now we're just aligning the time frames. In regards to supply and demand, we had rally, base rally, pullback. Would have been an entry, impulse. Rally, base rally, rally, base, rally, rally, base, rally, base, rally, right? So all of this would be daily demand zones. Now, since we had this high, market came down, reacted to this demand, then created a supply zone that removed this demand. Then the market came down to this demand and reacted. After this reaction, the market removed this supply. And if we had to ask, who removed this supply, we would say this drop base rally. So we're still on the daily time frame. So we have so far this demand, and we have also this supply, right? So we have the supply zone was created when the market removed this demand, as well as this supply zone was created. The market came up, reacted to daily supply, dropped down to daily demand, currently reacting. Now this would be the supply and demand range. Both zones are qualified. Now if we had to choose a particular direction to trade in, we would obviously want to go with the higher time frame, which is the weekly, which is bullish. However, the daily is due for a pullback since we had this run. Will this be the pullback to continue higher, or would it pull back further? Who knows? But that's it for the daily time frame, right? Now, taking in consideration we're just coming off of daily demand, let's look at the 4-hour. So on the 4-hour time frame, we have the market came down. This would be 4-hour rally, base rally, reacted to a daily zone nested in reacted to a 4-hour zone nested in the daily. Let's put this green, right? So we reacted to a 4-hour zone nested in the daily. So this would be 4-hour / daily demand, right? This was the reaction. Right. So we had impulse, pullback, impulse. This high was broken, right? So we could say the 4-hour is bullish. Let me just clean up these daily zones in the meantime. Right. So once we took out this level right here, the 4-hour trend became bullish. Right? So react to this 4-hour level. After this reaction, we removed previous 4-hour supply zones. This would be the demand zone, the drop, the rally base rally, responsible for removing the supply. And that's the zone currently in control. So we have weekly bullish. The market is coming off of 4-hour demand nested in daily. So with this information, it is likely we would be looking for longs, right? We would be looking for the market to make a new high, because this is our low, higher low, no, high, higher low, higher high, expected higher low to make the next high, right? So let's go down to the 1-hour now. The 1-hour time frame, we have is this a pullback? Right, so we have this downtrend on the 1-hour that did break trend line after tapping into daily 4-hour right here. So what can we expect? Well, we're expecting this 1-hour high to be removed and for the market to continue in the direction of the higher time frame trend. So now it's just to look for a possible entry, right? So we had this 1 hour supply that was removed. We took a trade off of this earlier today at this 1 hour demand zone. That's already playing out. So if we had to look below the current price for potential demand zones to buy from, on a 1 hour time frame we have this demand, and we have this demand. So these area is where I would be looking for potential buying opportunities if we get a pullback. So this is what could happen. The market could pull back to give us an entry at potentially these zones, or it could go ahead and go forward, creating a new zone that we could buy from. So let's go even further, right? 15-minute. Okay, so 15-minute. So on the 15-minute time frame, we have demand nested in the 1 hour, and well, this area here, there isn't no clear 15 minutes demand. So let's go down to the 5. I mean, these could be considered zones, but they're not the best structured basin wise. But nevertheless, let's go with them. Right. So we have this 15-minute nested in the 1 hour, and we have this 5-minute nested in the 1 hour. These areas would be our potential buying areas. Unless the market just goes up and then it pulls back, then we could look. But in the meantime, we look to buy at these areas. Anything could happen. You know, anything could happen in this market, but based on our analysis, that's the areas we would look to buy at. So I'll place a buy signal here. For 5R, and a second buy signal here. Right, so that's our zones.